So there are many times where, as a smart money trader, the market presents to you supposedly great setups with juicy risk to reward ratios, just like the trade you see on the screen, right? And so you get involved in this trade, and what happens is that your stop loss is smashed real quick. The reason is because these setups are smart money traps. Okay, so you might want to stick around to the end of this video because I will be showing you where and how these setups or these traps are built, right? Just for you to avoid taking unnecessary losses from these traps. Okay, so real quick before we delve onto the chart, if you are not subscribed, please hit that subscribe button, turn on post notifications, and also leave a like and a comment on this video. Okay, so let's step onto the chart and let me show you what I have for you today. Okay, welcome back to the chat, guys. So real quick, let me change the broker feed and let's talk about what we have for today. Okay, so this is what I'm going to do. I'm going to start with a diagram, right? I'm going to explain thoroughly using a diagram how these traps are built. Then after that, I will show you real life examples on the chart, okay, so that you see how they look like. Okay, so please stay to the end of this video because if you skip, you'll miss a lot, right? Great. So let's quickly start with the first diagram. So look at this diagram, right? Doesn't this look so good for you to, look for your buys right in here, right? Because what do we have? We have all these kind of liquidity built in here, right? You have an unmitigated block right in here, right? So I mean, it looks good. Price comes into this point of interest, you have a confirmation. So I mean, it's good for a buy, right? But this is a trap, right? So just stay on for a minute. I will show you why it is a trap, right? So look at this example also. I mean, what do you see, right? We've had a break of structure right in here, right, to the downside, and yeah, you'll be having this level as your point of supply, right? So you'll be expecting price to come in here, then you can look for sales to the downside, right? Once you do this, you will do this, right? So how about this last diagram? Let me show you real quick. You can see it looks almost like the first one, but even with this one, you have more confluences to give you that kind of mentality to go for the trade, right? What do we have? We have a push to the upside like this, right? We have liquidity left in here. We have an imbalance right in here, and probably like an unmitigated order block. And another thing that comes off is, price will give you this beautiful confirmation to look for the buys to the upside. But again, I repeat, this is a trap, okay? So you have seen all these three examples. Now, I'm going to explain to you why this is a trap, okay? So real quick, to start with this diagram, right? Always make sure you are looking at market structure first. Market structure should be the primary thing that you are looking at before you add all other concepts like liquidity and all those stuff. So real quick, what do we see here? We see price making what? Lower highs and lower lows. So it means we are in a downtrend, right? And I think I have talked about this before in one of my early videos, right, where I mentioned that in here, because we are making lower highs and lower lows, this level in here is a kind of liquidity, right, which I call the protected liquidity, right? And this low over here is also a kind of liquidity which I call the target liquidity. Some people also call it the external liquidity, right? What this means is that now, after seeing price making lower highs and lower lows, and price comes into this supply zone or this protected liquidity, when price is coming back down, there is a higher tendency, right, that price will take out this low. And that is why it is called a target liquidity or an external liquidity, right? Now, no matter how beautiful a setup is presented on your way to the target liquidity like this, when you see an order block right in here and your target liquidity has not been taken out, please don't go for the setup because you'll be smashed, right? The ideal intention of the market is to take out this low first, right, before you can look for any position. So this is the first scenario. So now on the second scenario, right, this seems a little bit complicated than the first one, but it is the same concept that is being applied here. Okay, so with this scenario, how do you look at this? Now, With the red line is going to be your higher time frame. Okay, so you're going to have your higher time frame putting out this high right in here. So it means that this high in here is the target liquidity of the higher time frame, right? And then you're going to have the black line being internal structure of lower time frames building up to form this higher time frame leg, right? So what do you see? We have this internal structure breaking certain levels to the downside. Okay, but what makes this break of structure different is the fact that when price broke this structure, right, it went straight into a level of demand of that higher time frame, right? And so when price is coming back, I mean, the intention or the logic behind this is higher time frames always have much power than lower time frames, right? So if price is coming from a higher time frame demand, expect this high right in here to be taken out. Most of the times, expect that high to be taken out. And this happened last week. It happened on gold. It happened on NASDAQ. It happened on US30. It happened on even EU, right? So there is another difference to this, right? There are times that you're going to see this break of structure. It wouldn't be a deeper one into that higher time frame demand zone, right? We are going to have it hanging within that higher time frame leg. This one, it is valid for you to look for buys to this level before you can sell back down, right? So in this scenario, it is valid. But when you have the break of structure extending into this level of demand, please be careful. There is a higher tendency that this high will be taken up. Okay, so the last diagram, and I'll move on to show you examples on the charts. Okay, so the same thing, this also has the same qualities as the first one that I talk about, right? So right in here, what do we have? We have price making lower highs and lower lows. This is a level of what? Supply, protected liquidity. The intention of price is to take out this low. You can sell from here to the downside. Don't look for buys right in any other block presented before the target liquidity is taken. Okay, the only time you can look for a trade, the only time you can look for a buy is when this target liquidity is taken out. Then you can look for what? Counter trend trades to the upside. Until that target liquidity is taken out, please don't look for buys. Okay, so examples on the chart, right? So let me show you real life examples on the chart. So just like this one, what do we see over here, right? We've seen price making lower highs, lower lows. We've broken structure to the upside, right? You have all these beautiful fair value gaps, imbalances, and all those things right in here, right? We have an order block right in here, right? And what do we see? Asian low taking into this order block, right? And the beautiful thing, this is where the whole source is presented. So you step into your M1, you are looking into this area, right? You are stepping into your M1 to look for your confirmation. And look what you see, very beautiful. Look in here within that's POI, that's smart money trap point of interest. Tell me that you're not going to go for these buys. Tell me you're not going to go for these buys. I mean, you go for the buys, right, to the upside because everything has met your, your setup criteria. But then you go for the buys and then it smashes your stop loss. Why did it happen like that? It is because this low that you are looking at is a target liquidity. It is not a valid point of interest to what? To look for trades. So how should you have read market structure? This is how to have read market structure, right? So the right way, what do we see price doing? We see price break structure to the downside like this. Okay, so this was the high that created this low, right? This internal structure that you see is just fractal price movement, right? And even if you don't understand whatever is happening, look at how price reacted to, this level in here. It tells you that this is a protected liquidity. This is a supply zone, right? And so even if you won't get a trade from here, or you are not yet confirmed on looking for sales from this level, what do you see? Internal structure. We've broken structure to the downside, right? After that, what do we have? We have a follow through break of structure. And this is where I personally had a trade to the downside. Meanwhile, other smart money traders were looking forward to buy from this level, which is not so, right? This is a trap. Don't look for it until this low is taken out. Then if an opportunity is presented to you to look for counter trend trades, then you can look for those trades to the upside, right? In this scenario, there was an entry confirmation on M1 to look for counter trend trades after the target liquidity was taken out, but then price was still respecting what order flow. That is why we didn't push up for the counter trend trade. Another example, look at this example right in here, right? What do you think that smart money traders are doing? We have seen price making higher highs and what higher lows, right? And you might call this a break of structure to what the downside, and you are looking forward to sell, if not from here because of higher the equal highs built here. Probably you are looking forward to sell from this level, and maybe you have not watched my video on the Asian session liquidity, and so you don't even know that the Asian session liquidity, when it is in confluence with a point of interest, that point of interest 80% of the time will become invalid. You don't even know, right? So after seeing this break of structure to the downside, you are looking forward to what? To take the sell right in here to the downside. Meanwhile, I am taking my buys from here and I'm looking forward to take out this high, because I understand that on the higher time frame, I have price making this low, making what? This high. I have retraced into certain levels of this higher time frame leg, right? And internal structure, I have broken structure to the upside, right? Whatever is happening in here is just liquidity grab into this level of demand of this leg, of this internal structure leg. So I understand that from here to this high is one leg of that internal structure, and if price comes into this level, this is a level of demand for me, right, to look for buys to take out this high. Other confluences that I employ is the fact that this high that you are looking forward to sell from is in confluence with the Asian session high, which is a liquidity pool for me, right? And so it gives me that confidence to take it out. Apart from that, remember I said this was the low that created this high, so it means that price is expected to come to at least this target liquidity of the higher time frame, which is also in confluence with the Asian high, so it will likely be taken out. And look at what happens. Price just comes in, takes out this high and takes out this high. Probably you may argue that this is not clear enough. Let me show you what happened on gold. So here on gold, somewhere last week, look at what happened in here. Believe me, a lot of traders were looking forward to, sell from this level. Meanwhile, you're not supposed to do that. Why is that so? Higher time frame, we have pushed to the upside. So this is a higher time frame target liquidity, right? This was a point of interest or a level of demand from H4. Okay, so in this scenario, you can see how the 15 minutes broke structure right into the H4 demand. So there was a higher tendency that the H4 bullish strength is going to take out this high, right? If the break of structure of this 15-minute leg was a shallow one like this, yeah, probably you could have looked for price to come into these levels and then you sell back down into this level of demand. But then this time around, when it broke structure, when the internal structure broke to the downside, it was right into that level of demand of the H4 point of interest. So you don't look for sales in here, right? Because that is a trap. If you take any sell from here, you will be smashed. If you're looking forward to take any point of interest from here, you will be smashed also. Because why? It is in confluence with what? With the Asian high. Apart from that, what can you see? Equal highs, right? And you even have a level of supply right above here, right? So why do you look for sales in here to the downside? Don't look for them, right, until that liquidity is taken out. So in this case, until this target liquidity is taken out like this, you can't look for sales. And if any sales that you're going to look for is just going to be what? Counter trend trade after the target liquidity is taken out. Okay, so one last example and then I'll end this video. Okay, so right in here, look at this. Okay, what do you have here? You have price making higher highs and higher lows, right? If I switch to the M1, you're going to see how beautiful this looks like. So real quick, let me switch to the M1 and let me show you. So right in here on M1, look at what happened. All right, so you've broken structure to the upside. All right, you were expecting price to come into probably this point of interest because there is an imbalance and all. You have liquidity built here, but price didn't come. right? Then we made a push to the upside, another, push to the downside. We broke structure like this to the upside again. And when price came back into this point of interest, look at what happened. You have this beautiful confirmation right in here on M1 like this, broke structure to the downside and tap into that point of interest, broke structure to the upside. Tell me that you won't look for buys in here to the upside. Tell me you won't do that, right? But in real sense, this is also another trap. Why is that so, right? Even though you may have confluences like imbalance, you have all this liquidity built up and all those stuff that you'll be marking as your confluence, right, to take the buys. But then what was structure really saying? Step into the 15-minute time frame and restructure the right way. What was structure saying on the 15-minute time frame? So here on the 15-minute time frame, what do we see price doing? We see price making what? Lower highs, right? Lower lows, lower highs. So this was just a retracement. Personally, I was looking forward to take the trade into this level. I had a counter trend trade, but then it was from right in here, not from where the trap was. Okay, not from where the trap was. So I had a counter trend trade in here, and I was looking forward to take it to the supply zone before I can sell back down, right? And this is because this low in here was a target liquidity. So after taking that counter trend trade to the upside, I'm now coming back down to take out this 15-minute target liquidity, right? But we can see that price never got into that point of interest, and that's fine. And as at the time that this trade was playing out, I was having a session with one of my clients, right? And so I was even telling him that this trade will take me out on a break even because I couldn't manage the trade whilst I was on the session. And I even shared this with you on my Instagram, right? So anytime you see this kind of trades presented, right, on your way to a target liquidity or on your way to a low or a high, please don't look for the trade. Don't go for the trade unless those target liquidities have been taken out before you can now look for counter trend trades to whatever direction that you are looking at price to go, right? So this is where I'm going to end today's video, and I will leave a link to the liquidity video which I spoke about from the beginning, right? So yeah, peace out.